I'm William Mwembe here on Times Television, and this is Business Time, a magazine program where we bring you major business and economic news stories making headlines in the country, courtesy of Skyban. And in the program today, pension assets grows to 757 billion kwacha. We speak to the central bank governor what this means to the economy. We have this and other stories. Stay tuned if you could.
Now you can access the Daily Times, Malawi News, and the Sunday Times newspapers anytime, anywhere, by the click of a mouse or a swipe on your smartphone. With ETimes, right on your mobile gadget. Flip through the pages with a swipe or a click. Navigate through all pages and see clear pictures and designs. Access a database of previous papers of the Daily Times, Malawi News, and the Sunday Times. Easy. Subscribe now to ETimes. Go to www.times.mw/e-edition. Sign up and log in. Enter your password and enjoy the newspaper. It's about time.
Hello and welcome. In our main story today, pension assets have grown from 78 billion kwacha in 2011 to 757 billion kwacha as at March 2019. However, some stakeholders are saying that the funds are not channeled to other sectors like infrastructure development. We caught up with RBM Governor Daliso Kabambe for an insight.
I was saying that since the passing of the Pensions Act in 2011, pension funds have grown from 74 billion. Now they are 757 billion. By the end of this year, there will be 816 billion. By the end of next year, there will be 1.1 trillion. They have been growing quite rapidly. And a lot of these resources, currently, about half, they were invested in government debt, government securities, in predominantly treasury bills. And then another 30% was invested in the stock market, in listed shares. And only 13% was invested in infrastructure. Now that's a challenge because government debt is now going down. Again, the Malawi Stock Exchange has not been growing in terms of number of listed companies. So there is a problem in terms of where do the pension funds go. In other countries, I was giving examples of South Africa, Zambia, Zimbabwe, Swaziland, Kenya, where as much as half of these pension funds are invested in infrastructure development. As a matter of fact, if you go to Johannesburg, Sandton in particular, a lot of those buildings that you see, they have used pension funds. But equally true, if you go to Zambia, Lusaka, you go to Nairobi, Tanzania, just across the border, in Dar es Salaam, a lot of the buildings that you are seeing in those places, those cities, they are buildings that have been constructed out of using pension funds. Because pension funds, they are funds that people set aside to use when they have retired and have grown old. And an example could be if somebody is retired, is investing now at the age of 20, 24, to use that money when he's 60, 65, and up to maybe 80, 90 years of living. It means that the investment has to be long term. And it can't be a 91 treasury bill or just on the stock market when there are a lot of fluctuations in share prices. So the right way, which our colleagues and the world over are doing, is to invest these funds in long-term instruments, and infrastructure projects are one such area. The potential is quite huge. On one hand, as I said, government debt is going down. Secondly, the number of listed companies stock market is not growing that fast. It means that this money, these funds need to find a home. Otherwise, they will just push liquidity on the system, which us as a central bank, as the mandatory authorities, we need to do what is called open market operations and mop it out. As we do that, it is at a cost. But at the same time, these resources are supposed to be used for infrastructure development. That's what's happening elsewhere. And the current Malawi Growth and Development Strategy emphasizes that point, that we shall develop this economy out of growth through infrastructure development, developing our road sector, transport sector, developing our power, water sectors. And in all these these sectors, there are a number of exciting projects. An example being the Lilongwe Dual Carriageway, which has been developed using the funds from the pension funds. We need to see more of these projects. The challenges we're having in the energy sector, we need to see a lot of these funds going into the energy sector. The water problems in a number of districts and places, we need to see these pension funds going into those areas, including housing estate. We are having shortfalls of houses in cities like Blantyre, Lilongwe, Mzuzu. We need to see a lot of these funds going into such infrastructure developments, because as people pay for water, for electricity, pay for rentals, it means that the pension funds will be growing, will be serviced, and that's the direction which we want to see moving forward. That's inevitable because these funds are growing quite rapidly and there aren't sufficient room where they can be invested other than to take them through the road to infrastructure development. So we can use what our colleagues are doing and neighbors around.
But what do pension fund managers say about the situation? Edith Gia is Chief Executive Officer for Old Mutual Group.
We welcome the development. As you heard in the opening speech, we have done well on the accumulation. Where we need to work more is on the asset allocation to ensure that we're channeling the funds accumulated to areas that are going to provide a particular return, but we also need to look at managing the risks that are there in this new channel that we're looking at. Our role, especially from an asset management perspective, is to ensure that we are getting a return, but it's risk adjusted. We are able to understand what risk each investment is presenting to us and to our policy holders, but we are also able to manage those risks. And that's our day-to-day job generally. And as we use this platform, it will be to also work through with all these other stakeholders to say these are the risks that we're seeing, at least from our perspective. We also understand from their side what are the challenges, so that we can all be very clear and work towards managing and mitigating those risks as they're presenting. There are quite a number. If you saw the presentations earlier on, there are issues around governance. There are issues around whether you are actually going to get the kind of return. There are issues around the regulatory framework, changes, because changes, when you make an investment decision or an investment case has been made, it's on the basis of particular assumptions. If those assumptions change without any warning, it's also an issue that we need to manage. There are also issues around the tax framework, whether the tax framework itself is incentivizing asset managers to actually allocate funds towards a specific channel. So these risks and some other more, the moment we all start to understand it from the same perspective, we will be able to manage and mitigate against them. Indeed, we need to cast the net wider. And I think what we can acknowledge, at least from our industry, is that we need to do more. Yes, we have done investment in shopping malls. We have done investment in office spaces, but the industry has also invested in the ICT infrastructure. When you look at some of the entities that are driving information technology in Malawi, they have quite significant funding from the financial services as well. So what we need to do now is to scale, because we have accumulated the pension funds now. We need now to scale our investment channeling towards alternative investments going forward.
Now, in agribusiness, horticulture farmers in the country have been urged to adopt technological measures of producing their products in a bid to remain competitive at both local and international markets. We spoke to CEO for Synthesis Agriculture for an insight.
Instead of locally market, if you have a time, go through supermarkets, you notice that the 80% of what they're selling is import. They are importing. Malawians are eating tomato imported from Kenya, are eating garlic, ginger imported from South Africa, flesh market. Uganda is importing watermelons into Malawi. What does it mean? It means we are not producing. So there is that gap whereby Malawi as a nation, we are losing our currency by importing all that because Malawians are not producing. You might ask us, why are they not producing? This is the reason where we come in, that Malawians has to produce. Not only that, if you ask me about an international market, it's a wide market that we have even been asked that we should export a minimum of 1,000 metric tons monthly. So the question is, if you are failing to supply at local level, can you supply at international? So market demand is so huge that if I could compare it in the monetary terms, Malawi as a nation, we are losing a lot of money in as far as these high-value horticulture crops is concerned. We are not doing, we are very far to what is needed.
Where are these markets that you talk of that demand?
Oh my God. We have a market here, as I'm speaking, in Dubai. You know, Dubai is a desert area. Every Friday, we are intended to supply to every Friday, we are supposed to export 120 metric tons via air cargo into Dubai. We have a market in Germany, we have a market in Italy, Ghana, Botswana, we have a market in the USA, UK. There's a market all over the country. But it's very unfortunate that Malawians are not making use of this opportunity.
Remember, this is Business Time right here on Times Television, a magazine program in which we bring you major business and economic news stories making headlines in the country. We'll be right back.
Now you can access the Daily Times, Malawi News, and the Sunday Times newspapers anytime, anywhere, by the click of a mouse or a swipe on your smartphone. With ETimes, right on your mobile gadget. Flip through the pages with a swipe or a click. Navigate through all pages and see clear pictures and designs. Access a database of previous papers of the Daily Times, Malawi News, and the Sunday Times. Easy. Subscribe now to ETimes. Go to www.times.mw/e-edition. Sign up and log in. Enter your password and enjoy the newspaper. It's about time.
Vanka Sacco has posted a surplus of 76 million kwacha in the year ended December 31st, 2018. This was said during the Sacco's AGM over the weekend. Chimwemwe Mangazi was there and now reports.
President of the Sacco, Justin Zinkambani, attributed the development to an increase in membership, which has grown by 1,000, which also increases patronage of their loan products.
Our Sacco has been improving in terms of its performance on the statistics. Last year we made 56 million, and this year we've managed to make another 76 million. This is through membership growth in terms of the savings and the loans that have been collecting from the Sacco as a group. But ideally, they share these monies at the end of the day. We might call it a profit, but the purpose of the Sacco is for the members to gather their monies together and also lend to each other. And in the process, they give each other a small amount of interest, which they end up sharing because they are also shareholders.
Head of Human Resource at Salima District Council, Tamika Milingo, who was guest of honor during the AGM, hailed the Sacco for the achievement, stressing that they facilitate easy access to finance among low-income earners.
They are very critical looking at the way other lending institutions are exploiting a lot of civil servants, especially in the issue of interest rates, when the civil servants are borrowing money from some of the institutions. Also, the SACCOs are important because they build a culture of saving to a lot of civil servants.
Business Development Manager at the Malawi Union of Savings and Credit Cooperatives, Moscow, Ezekiel Tindwa, said Vanka Sacco has proven to be one of the most successful cooperatives, growing in profit and assets.
Well, the performance to me is excellent. I would describe it using the statistics or the data based on the audit report. I'll start with membership, because when we are looking at Sacco performance, we base on membership, because membership is the key denominator for the growth of any Sacco. Now, looking at Vanka Sacco, they have grown their membership from 3,400 to 4,400, a growth of 1,000. It's a mere achievement, which results in the performance of the Sacco. Secondly, the growth of surplus, the profits. Vanka Sacco has performed very well.
During the AGM, the Sacco recognized founding members and ushered gifts to outstanding performers in the adult literacy class. From Lilongwe, I'm Chimwe Mangazi.
Meanwhile, another credit cooperative, Sunbird Sacco, posted a surplus of 63.3 million kwacha during the said period. Isaac Salima has the whole story.
The annual general meeting endorsed the 31.6 million kwacha dividend as proposed by board directors. Sunbird Sacco outgoing board chairperson Yason Pondamari was optimistic that the Sacco would continue registering surplus.
However, the surplus was just 1% above last year. The reason is attributed to the compliance issues, because we needed to comply with the Financial Act requirements. So that outweighed the surplus. I see that Sunbird Sacco will continue going forward, making surpluses and profits, because in terms of stability, the Sacco is very strong, and again, its asset base is strong. The membership is growing. For your information, in 2018, the membership grew from 2,206 to 2,557. So, looking at the environment, to have such a growth of 16% in terms of membership, it's quite a great achievement.
Malawi Union of Savings and Credit Organizations Board President Fresha Muhango says Saccos play a critical role in the economic development of a country.
Saccos plays a very big role because, in the first place, it is a member-owned institution. Members benefit from their own institution by accessing cheaper loans, enhancing their livelihood, paying school fees for their children, building houses, even buying motor vehicles. These are some of the major achievement members register as members of the Sacco, which means their livelihood always increase, and that us as Moscow we feel good, because an institution owned by members also help the same members to change the economic status.
Sunbird Sacco has a membership of 2,557. For Times, I am Isaac Salima.
The Malawi Energy Regulatory Authority MERA has introduced what it calls rural services model, with an intention to entice businesses in the country to open filling stations in rural areas. Our reporter Isaac Salima reports.
Malawi Energy Regulatory Authority Director of Liquid Fuels and Gas, Alinafi Kavea, says they have softened the up on requirements to construct rural service stations with the aim of attracting more operators.
The Malawi Confederation of Chamber and Commerce has an SME Expo going on from today up until Sunday, where they are showcasing the many businesses that the SMEs are doing in the country. So we thought it would be important for MERA to to reach to these SMEs because we have got the rural service station model, which is promoting the installation of rural service station models in the rural areas where we feel there's lack of investments because of the huge costs that are associated with an urban service station installation and also the low volumes that are associated in the rural areas because of low demand. So this was like our information session to bring in awareness to the SMEs that there's this model that people can consider as they are considering some of the business ventures that they go into. The rural service station model in itself is an incentive because we have kind of reduced the level of requirements that we usually request for a normal service station to be constructed in the country within the urban areas. So we're looking at a reduction of cost. So when someone has to go into the business, they will be able to assess that there's now going to be a better return on investment as compared to if they had to fully comply to the standards that we demand for an urban service station. So the costing is what was usually a hindrance to people investing and the volume demand that is in the rural service station.
One of the filling stations operators, Ronex Nkomba, appeals to the energy regulatory body to come up with more incentives.
Asking us that maybe we invest more in the rural areas. So they were giving some other things which they can do. For them, they're thinking that maybe the rural one is cheaper than the modern one in town. So, but to me, I don't see much difference. Thinking that maybe if they could have put motivations for someone to invest in the rural, maybe that could have been much better. Because at the moment I don't see any motivation which can make somebody to go in this. Because all the standards, they are the same.
One needs a capital of at least 200 million kwacha to set up an urban service station, but the rural service model will enable one to construct a filling station with at least 40 million kwacha. For Times, I am Isaac Salima.
Now, in our budding entrepreneur segment today, Sharon Chirwa speaks to Chande Chirote, a fitness fanatic.
I said, these big ones, they are catering for the elite. What about the other part that we are? They are failing to access. Can't I venture into this business and offer a solution to those who need it, but they cannot afford it? So I said, let me open a gym that would have a competitive pricing that every gym and jack who cannot manage the other notable clubs should be able to say, let me go to the body project. Less than capital is always something that is limiting in terms of coming up with a business. For my sake, there were some people who inspired me to say, Chande, can you start this? We'll support you. We know the potential that you have as a trainer. But if you have to go solo, do your own thing, we'll be able to come in and then try to bring in some customers for you. But then that was okay, bringing in the customer. But the problem was, where do I get the cash to raise the equipment, renovate the place, and do everything else? So I started some savings, little by little. When I get the money, I'll go to game stores, buy one equipment, put it there. It took me a lot of months to assemble the thing that I needed. All the other years, it was not even reaching a break-even point. It was just a loss, until 1.5 years when I now started realizing that I'm making an interest out of the investment that I have done. So it is best to wait, improve on your standards so that you still attract somebody to come in, so that end of the day you reach your targets. No matter that you cannot reach it 100%, but still more there has to be something that is above the break-even point, which is now your profits. One thing that I learned is to say that you need to look at where there is an opportunity and where now you need to have an idea to make that opportunity worth it to you. Because honestly, there are so many opportunities out there. But the only problem is that how do we now take the risk to realize where the opportunity is and turn that opportunity to be yours so that you make a living out of it. So one of the things that is always limiting to us as people who want to venture into business is one, fear of unknown in terms of the risk factors that are coming in if you take your money, put it in a business. Let me tell you honestly, you cannot make 100% profits from the first day. If you do that, just know that something is going to be wrong very soon. So I've learned to make a living out of an opportunity that is opening up in my business.
Well, with that story, we've also come to the end of today's edition of the program Business Time, right here on Times Television, a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Umwembe. But always remember, if it doesn't make money, it doesn't make sense. Bye for now.